And get started. So the in-out spread advantage, how consistently grow a small account. Again, my name is Don Kaufman, and you are watching a Theotrade presentation. A bit of a risk disclosure. We're not a financial advisor nor a broker dealer. And I love to throw that in there because I did, in fact, spend about 15 years in the brokerage world prior to us launching Theotrade. So brokerage world, contest, I have to answer to FINRA no more. With that copyright disclaimer, this is ours. This is not yours. Actually, one of the real reasons I throw this up here, I always want you to know that after today's presentation, you can get a hold of us, and you can get a hold of me specifically. Just email us right here, support@theotrade.com. So we use a common inbox. What that means is it's just easier to decipher the emails and be able to grab more emails that way. But just put Don in the heading, and that email will actually go directly to me. So if you ever need to get a hold of me after today, and by the way, like, as I said, again, we answer emails here. We answer hundreds of emails every single day. So Theotrade also happens to, we're transplants now. We were based in Scottsdale, Arizona. We are now based in Christiansted, Virgin Islands, which is actually on the island of St. Croix. We moved there in October of last year. I'm just back in Arizona for about 2 months. And literally, I'm headed back again to St. Croix this next week. I'll be there probably to about December, January timeframe. This is why you're here today. I mean, that's what's important. One of the first things I always say, about these webcasts. Listen, you took the time to be here. Be here. I'm actually going to throw a huge amount at you. And in today's discussion, actually, this is one of my favorite things to talk about, which is in-outs. And I'll describe what an in-out is here. But this is one of the sessions I kind of tend to go off a little bit about probabilities. I hope that's okay with you. And by that, I simply mean I'm definitely going to tax you a little bit on your understanding of the markets. And I'm a big believer, like if you're going to spend the time here, you should be challenged on every level. And I'm going to do just that for you today. So by the end of this webcast, again, I want you to understand, effective trading logic. Trading logic is absolutely critical. If you've never heard about trading logic, it is not something that I talk about on a day-to-day basis, especially on these, on a webinar like today. And I'm going to hammer you about trading logic right up front. And you're going to understand what that means here so that you can turn kind of like chaos and really volatility into profitability and probability. You're actually going to learn how to cope with risks and understand portfolio exposure. And we're also going to talk about what strategies need to be deployed, okay, and why you're going to be on the offensive, okay, can be really, really profitable. So what that actually means in the midst of volatility. And volatility, we are going to see. In fact, you're going to see some more of that today, tomorrow, the remainder of this week. And then discover what skills, okay, you could be implementing and why these tactics at this point moving forward, this stuff's going to be imperative. And I think you guys will understand that here momentarily, that what I'm talking about today is a dramatically less risk than most retail clients would ever take in this marketplace. So let's actually get to it. Auto expected move. So there is an indicator that I will reference a number of times, and I reference in a lot of different presentations because I use it. It's called the auto expected move indicator. It is a phenomenal resource. If you've never used it, if you've never seen it, we will provide this resource to you. We are literally giving you a $500 indicator. Why? Number one, because I reference it constantly here. And if you're going to be able to employ or deploy any of the strategies or logic that I discuss, okay, I think it's imperative that people have this particular indicator. Stay with me right until the end of this webcast, literally right to the end of the webcast. I will give you a web address and you'll be able to actually pick up the auto expected move indicator. I will not go into too much detail right now, but for the most part, it has everything to do, okay, the auto expected move indicator. And this is such a cool example. I took this screenshot last night and I'm stoked about it because how important these three lines are. This is what the option marketplace depicted risk to be. That's where the marketplace currently is. Look at this. Look how, like what I'm pointing out over here, the market was supposed to stay inside this range. All of a sudden we're down here. Okay. That's like what they call a 3 sigma move. It's totally unheard of. Except that today, if we looked at the exact same underlying, and again, I like to keep this presentation dynamic. I can't stand people spend like an hour in PowerPoints and so forth. Look, you want dynamic? Here's dynamic. Here is dynamic. Okay. Check this out. Look where the marketplace is right now. Okay. That was a screenshot that I took yesterday. We were down here. Look where we are right now. We're reaching right for the edge of the expected move. Okay. It is absolutely incredible though to see that kind of price action. Anyway, I'll describe that maybe a little bit as we go along. That's the indicator we provided to you. It's free. Okay. We want everybody to be able to look at these ranges on a day-to-day and a week-to-week basis. Onward and upward. This is a little bit about me, okay? So sit down, tune in, turn on, pay attention, people. I watched order flow for 15 years. That's actually in large part what brought me here. So I'll give you a little background because I know there's a lot of people that are brand new here. Anybody here brand new has never even heard of a Theotrade before? Come on, admitting it's the first step today. Even if you're watching this on a recording, don't worry, just talk to the screen, man. So I'll give you a little background on me because, for what it's worth, I grew up around traders. People always ask, where did you learn to trading and listen, I grew up around it. I literally grew up around it. I had, families that were market makers. My uncle specifically started a big trading firm in the Chicago area. It was called O'Connor and Associates. He started it in the 1970s. By 1983, he had over 500 seats in exchanges worldwide. The firm sold for billions of dollars in 1992. It was in the late 90s that I actually got involved, and I worked for, a cousin who was also very close, friends with another trader. So I worked for a trading group, and I worked for a trading group for about the first 18 months of my career. And then I knew some individuals from the OEX pit. If you guys are familiar with some of the markets, old school product called the OEX pit. And in the OEX pit, I knew a couple of traders down there. And, there was one trader that introduced me to another. And they said, hey, kid, we're starting a brokerage firm. And, you got to get off the floor. And, hey, listen, why don't you come work for us at the brokerage firm? And I'm like, okay, at the ripe old age of 24 years old. I went to work for a startup brokerage firm. It was called Thinkorswim. And they said, okay, here's a pile of money. They literally did this for a 24-year-old. Here's a pile of money, start an education firm. Okay, it'll be under the Thinkorswim banner. Go for it. And lo and behold, I was on the executive team of Thinkorswim, one of the first people there. We took the company public in 2007. We were acquired by TD Ameritrade for over $600 million in 2009. I went on then in an agreement with TD Ameritrade from 2010 to 2015. I ran the entire education division of TD Ameritrade. And at the time, we had about 7 million clients. But the moral of that story is the way that we actually built education was highly unique versus what was being done in the industry. What we realized both at Thinkorswim and TD Ameritrade is we had you. Who's you? We had actually the largest client order flow in the entire retail business. Now, think about this. In Thinkorswim back in the day and TD Ameritrade, before TD Ameritrade was bought by Charles Schwab, they had more active traders than any other brokerage firm. In fact, they actually had more active traders than most of the brokerage firms combined. What did we do? We studied all of your trades. Okay. We actually researched order flow. That's your trades. And we knew everything about you. If you did, like covered calls, we could tell you if you're going to make money, lose money. If you did iron condors, we knew everything. We actually studied upsides, downs. We literally had an entire crew at TD Ameritrade that was nothing more than a data mining crew. We had like PhDs, okay, that were doing nothing more than big data analysis on your trading. We built a lot of the education. The only problem was we couldn't give you the full Monty. We couldn't tell you everything about the trades because of regulatory restrictions. So I had a 5-year lockup clause at TD Ameritrade. From 2010 to 2015, I was locked up. 2015, I exited TD Ameritrade, and less than a year later, we launched Theotrade. And Theotrade does, of course, encompass several of the individuals that worked in that group, specifically at both Thinkorswim and TD Ameritrade. So it's a little bit of a background on me. I mean, what you learn here today literally comes from watching billions in order flow, but more importantly, billions in other people's mistakes and the knowledge of what actually works well for retail traders. I still do a lot of media appearances. This is actually TD Ameritrade TV. It's the last time I was in Chicago. It's crazy. I've been going to Chicago my entire, adult life, back and forth, either trading there or working for Thinkorswim. I haven't been to Chicago now in almost 2 years. It's really, really crazy for me. This is actually a couple of CNBC appearances. This is just one of the more memorable ones because it's Kevin O'Leary they pitted me against. He was the long, I was the short, and I was very much right. All right, continuing on over here, get to work. Risk. Your money's on the line. One of the first things that I want to elaborate upon for today. By the way, yes, I am actually reading the chat room here at the same time. Okay, I like it. Your money's on the line. And one of the things that I want to express to you, deeply express to you, before we dive in head on and talk about some really specific trades, which is absolutely what we're going to do, we need to talk about how you handle your risk. Okay. Retail is really not very good at this, and professionals are excellent at it. And most professionals, they make their way in this business because they handle risk, okay, infinitely better than most retail. And I don't want to pit, retail against institutional, okay, but the bottom line is the institutional traders, and those are just, individuals that work at either banks or trading firms, they get risk. And what you learn in this business is how you handle your risk, okay? How you handle your risk is directly correlated to your success in the markets. And think about that, too much risk. What are you going to do? You're going to panic, right? You're going to close positions continuously, constantly at the worst possible time. Anybody ever done that? Okay. By the way, this is almost going to be like a 12-step program for trading. I'm going to start with here. So it's fun. Listen, people are totally consistent with their panic. They all panic at the exact same time. The one thing that I'll tell you was a real, like I never realized it at the time. People always say things like in retrospect, but I never realized it at the time. But like looking back in retrospect, the time that I spent at Thinkorswim and TD Ameritrade, like was totally invaluable. It wasn't just invaluable on the idea of like, oh wow, I got to, take a company public. Forget all that. Okay, it was invaluable because you got to watch order flow and you learned like just the psychology of markets was insane. It was insane. Everybody would panic at the exact same time. I mean, I sat behind screens all through 2008 and 2009, watching people just barfing up the positions. I was there in 2001 when we first launched, but the internet bubble was still like bursting. You learn, okay? I've looked at literally hundreds of thousands of accounts. We used big data. We've looked at millions of accounts. I'm going to tell you right now, I know exactly what works and exactly what doesn't. Problem is, what doesn't work just gets repeated over and over again, especially today. There are more new traders today than have ever been before in the history of markets. There are more new retail clients that are retail clients that had never really traded before in the last year, okay, than there have been in the last 20 years combined. Think about that. In terms of the number of account openings, there's more new people right now than in the history of new people coming into the market combined over the last 20 years. That's how wild account openings have been. Here's what works, okay? You got to follow a system that's been sourced from hundreds of thousands of people like you. One of the things that I stress to traders, I make kind of a big deal about this because a lot of people are like, yeah, I was in the professional trading world, or I was a market maker. That in my career means squat. Who cares? So what? You stood down on the floor. You stood down on the floor and you're like, buy, sell, and it looks really chaotic and everything, but it's not. I mean, you just there, like, your own little, like, individual down on a trading floor, and all you're really doing is scalping bid offer spread. That's it. That's what market makers do. I mean, at least the ones on the trading floor. But what we learned over the years is what works for you, for retail traders, is a vast differential. Okay. Retail, okay. Again, you gotta literally follow a system that's been sourced from people like you, like retail. And retail is not a dirty word. I'm a retail trader, you're a retail trader. You got to cut losses, and then you got to use a repeatable strategy to obtain incremental returns. And I'm going to show you obviously how to do that. Successful trading strategies exemplify these following principles. And I'm actually going to get into principles over here. You're going to find that success is a series of small wins. principles of building a trade. And as I said, today it's going to be a little bit different. So this is where I really want you to kind of tune in and say like, hey, listen, we're going to talk about some trade logic right now. Trade logic, capital allocation, directional bias. Okay, these are the literally the three principles of building a trade. Now, if I asked you, okay, if I asked you like, hey, what's your trade logic? Okay, what's your trade logic? You could be like, I don't know. you know, what is your trade logic? I think it's a pretty easy question. What logic are you using? Well, I go out and I buy a stock, Don, that I think is going to go up. Wait, up? That is directional bias. That ain't trade logic. Your logic can't be that. Well, I use a MACD, a Fibonacci. That's directional bias. What's your trade logic? Okay, I don't care what you think. That doesn't matter right now, and I'm dead serious about that. What you think? Okay, everybody's got thoughts. They're all out there. Just turn on CNBC. Come on, literally on CNBC, they pit what one bullish person against one bearish person. You're like, that bearish guy today's got a damn good argument. I'll take it. Like it's that wild. Directional bias is tertiary. It's the third one on the list. Trade logic. That we have to cover first. Allocation, critical. Okay, why? Well, let's get to it. Let's actually explain what these three nuances are before we go any further. Because again, if you want to learn something here today, pay attention to these three things because it is your approach to trading. And if you look at any major derivatives firm on this planet, any trading firm, they all have, okay, these three principles implemented. There's no if, no and, or but about it, the three principles, and they look at them this way. Trade logic. You have to place strategy and trade logic first. It's almost like, if you will, gaming theory. Logic. It's like gaming theory. The vast majority of people involved in the markets are infatuated with market direction, attempting to predict the next move. Okay. I mean, as I just mentioned a moment ago, you turn on CNBC, you're like, yes, I agree with you 100%. You're agreeing with your own bias. Okay. You're feeding yourself your own garbage. But, by the way, if you actually look stuff up online, you go, I don't turn on CNBC. Great. So you look stuff up online. By the way, if you look up, like, and I'll just give you an example, a bearish article, you do realize that the entire idea of the internet is to feed you more stuff that you want to read, which gets you in a little bit of a silo. So if you read something that's bearish, okay, it's just going to feed you more bearish. If you're going to read something that's about bullish information, it's going to feed you more bullish. That's how the algorithms actually work. You have to love that too. People are, I'm always bearish, man. Okay. Anyway, the right strategy coupled with established entry and exit criteria, you're not necessarily going to have to be right in picking direction in a stock or the markets in order to be profitable. I'm going to say that a couple of times today. Being right, it's important, okay, but it's not the center of importance, right? So we have to have the right trade logic, which I'm going to explain logic here. Then we actually come to capital allocation. I love this. It's the piece of the money pie. How and where you allocate capital, okay, should strongly be considered as a viable portion of your trading methodology. By the way, this is the underdog. Like, nobody ever talks about capital allocation. Nobody ever talks about capital allocation until after you have an allocation issue. Anybody here ever traded just a little bit too big? Just a little bit too big. And when you traded a little bit too big, you ended up getting out of a position at the worst possible time in your entire life simply because you're like, I'm nervous. Blah. That's why there was the puking guy earlier. You were a little bit nervous and you jumped out of trade. And the second that you jumped out of the trade, you were the low tick. Congratulations. You sold at a lower point that day than anybody else in the history, well, of that trading day. It's exciting. So capital allocation, okay, if you think about this, it has to take precedence over being right in the markets. It's not going to matter if you're right. You will not be able to hold a position if you're not comfortable. Comfortability. I want you to think about that. Yeah, anybody do that? Okay. So, all right, continuing onward. Nobody here has ever done that before. Come on. Admitting it is the first step. So capital allocation is critical. Then, as I said, it's tertiary directional bias. And I love talking about directional bias because I am a quant. And if you've never heard of what a quant is, I'm a bit more of a numbers geek, probability geek. That's what I live in, and that's, I'll do anything that's got some probability, some odds in it in my favor. I'm less inclined to look at a chart. I'm not anti-charts, but I recognize one aspect. And again, be as objective as you possibly can. Everything that's being thrown at you in this entire business, it's like red and green flashing arrows, and like this stock's going to go here, the stock's going to go there. You do realize that no one knows anything, right? Let's just cut through all the garbage out there. You do realize that no one sees the future. Okay, that the crystal ball. I bet this dog. Okay, he's cute. He's got a better shot than most of you in picking market direction. You're like, that's not true. I have a Fibonacci. Okay, think about this. You have a magical 618 that's picking market direction. Again, I'm not anti-charts, but what you think, you can't put your capital and your livelihood on the line, all right, on based, sheer respect to what you think. And that's why it's tertiary. Being right directionally cannot define us as investors or traders, where you might not be right often enough. And that's pretty critical. Okay. How and where. How and where you allocate capital, okay, can define not only losses, but it could be the defining factor in your overall success or failure of the markets. Like our war cry, and this ties right into charts, our war cry is duration over direction. You need to be capable of sustaining trades long enough to be profitable. And you'll hear this phrase, duration over direction quite frequently, and I'll show you this. Okay. And the last aspect of this is just kind of a fun thing here, but you want to be right or you want to be happy. And it's, again, I don't apply it very well to everybody's heard this phrase. I don't apply it very well to my marriage, but it's I'll always take that stance that you don't have to necessarily be right to be able to make money. And you're going to see exactly that. And why? Because experience and watching order flow for decades has taught us invaluable lessons. You ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? Okay. We're leading into that. And again, I throw the stop order up here. I love this. I love this picture too. Stop. It's a 4-letter word. Okay. As I've already kind of questioned a little bit, regarding stop orders, this is going to get you in trouble. And I'm not going to pick on stop orders too much here, but you do realize that the exchanges themselves, if you looked up like New York Stock Exchange and stop orders, they banned stop orders years ago. Most people don't even realize that the exchanges themselves banned stop orders. Why? Because they thought it was an unfair advantage, okay, to most of the market making side of the business. And you go, well, how come my broker still offers stop orders? Because the brokerage firms don't always do things that are your best interest because you want that piece of technology. I'm going to show you how to overcome a lot of this. Let's get down to it. Core strategy and trade logic. Today, I'm going to introduce you to a real world strategy you can start using immediately. I think you guys are really like this. It's extremely risk averse. Before I get too detailed into the strategy itself, first, risk versus reward. It is imperative that we understand a very, very common mistake and a common strategic entrance to a marketplace. So this is, again, I don't mind saying this, but when you're looking at something like risk versus reward, this is one of the most misunderstood areas of the marketplace. And I stress this to you because this is also the most common entrance to the marketplace. Look, when we first learn about trading, okay, you're often exposed to the idea of risk reward. And what that basically means is when your guys get involved in trading, you go, all right, when you first get out in this marketplace, okay, and you first get out in this marketplace, what you really want to do, okay, what you really want to do is this. You want to go out there and be able to what, okay, to risk one to be able to make what? All right, you guys tell me. Two. A lot of people do this. How many people have ever done this before? Okay. How many people have ever gone out there and risk one to be able to make two? Come on, throw up those hands, okay? Or at least say, Y or N, depending if it's yes or no. The reason I like to spend a moment And I pause for this because I want you guys to think about it, because everybody learns, risk one to be able to make two. How does that work? I mean, how does it work? Forget about risk one to be able to make two for a second. How does it work from a probability? Look at the probability of the entire logic of the idea. It's like a horrifically slow bleed. Okay. So we're actually going to debunk a little bit about risk versus reward and show you, if you will, some of the most common strategic entrance mistakes that are made in the marketplace. And I'm gonna throw this out to you, and I'm just gonna draw it over here. So we're just gonna buy a stock. Okay. So we're gonna buy a stock. We're gonna buy the stock right at 38 bucks. Fair enough. So we're gonna buy a stock right at 38 bucks. And it's really common. Like, by the way, I'm keeping this nice round numbers just for argument's sake. So we're going to buy a stock right at 38 bucks. And then we're going to set a stop. Okay. We're going to set a stop at 37. Okay. And we're going to call this our target. And we're going to put that at 40. Whoops. I'm going to put that at $40. Make that easier so you guys can see it. Okay. So there we go. This is a very common, and it's what I would call a prototypical risk one to be able to make two, right? If you're wrong here, you're going to lose one. If you're right, you're going to be able to make two. Okay. Time out for a second. Think about the logic of this for just a moment. Okay. Think about the logic of it for a second. In a normal volatility fluctuation, put direction bias, put your bias aside for a second. All right. Somebody even came in and said, hey, I risk one to be able to make three. But think about this and legitimately think about this. Forget directional bias because everybody, like, they get it in their head. I'm always going to be right. I'm always going to be right. I'm always going to be right. Put that aside. Normal markets fluctuate. They got volatility. What's from a probability standpoint? What's going to happen first? Actually, go to the next slide. What's going to happen first? Probabilities in your trading. What's more likely? Getting stopped out or making a $2 profit? Again, I'll just throw it up on the screen because I think that this is essential that you understand. Okay. I get that the stock is trading at 38. And I get that the target is up here at 40 and the stop, okay, stop is absolutely instrumental, is at 37. In a normal volatility fluctuation, the probability of hitting 37 before 40, okay, is inordinately higher. How much higher? Okay. It's inordinately higher. How much higher? I'm going to show you exactly how to figure this out. But if you look at this, and nobody ever thinks about this in terms of the quantitative. This is actually one of the very first examples that was ever explained to me in this marketplace. I put this specifically into these examples in this slide deck because, I mean, the trading firm sat me down and taught me gaming theory and then showed this particular strategy where he's like, hey, man, you got all these retail clients and they get in here and they risk a buck to be able to make two, and they don't realize the probability of hitting 37, okay, is incredibly high versus hitting 40. And the guy says, it doesn't mean that they're not going to lose money, but think about how defeating it is mentally that you're going to hit 37 inordinately high versus hitting 40. You're going to get yourself a slow grind and you will die. You will die trying in this. Okay. Now, to understand this, you're going to learn a little bit about options right now. I am not here to shove options down your throat. That's not my idea. Okay. People sometimes are really resistant to this, but I'm going to tell you this: options are probabilities, and when you look at a marketplace, okay, looking at just stock, you're blind. Why would you not look at probabilities? Why would you not look at the options market? You go, because I don't understand options, or I don't want to have anything to do with options. I get it. The option marketplace is a price tag on forward risk. Why wouldn't you look at that? In something like Apple had earnings last night. You realize that there was about $7 to $8 billion. I just added up all the options that were traded yesterday. So anywhere from $7 to $8 billion, okay, in notional value of options traded in Apple yesterday. Okay, that was that. By the way, that doesn't imply like, how much was then traded today is off the hook in there, man. They may have $100 billion in options traded in that thing today. Options, though, are probabilities, and it's actually what options really are. Is it's handicapping forward risk. So you're looking at this stock and you're saying, what's this stock going to do? I'm going to look at a MACD. I'm going to look at a Fibonacci. I'm going to look at a Bollinger Band. Do you ever think to look at the options chain? Because the option chain is telling you what marketplace believes risk to be. Maybe you never looked at options. Maybe you've never traded options. Okay, they're based on probabilities. Options can help us in determining the viability of practicality. So the thing is about the options is it's telling me if my strategy is viable, if it's practical, okay? Any given strategy. How, you might ask? This is exactly what we're going to do. We're going to look at the probabilities, okay, in a risk one to be able to make two scenario. And again, this is like one of the most essential things. Now, I'm going to throw a screen up here, okay? I'll throw a screen up here. Don't panic, okay? Don't panic. Everybody's going to start foaming at the mouth. I'm going to explain in a little bit. I say don't panic because it's hideous. Look away. Okay, what you are in fact looking at. This is a screenshot of Thinkorswim. You could use Thinkorswim, you could use Tastyworks, you could use E-Trade, you could use Interactive Brokers. Ain't gonna make a difference. They all pretty much have the same calculations on them, okay? So there are some critical points that I wanna be making in here. Number one, this is an option chain. This is an option chain, okay? And in this option chain, there's 24 days left. It's an August option chain. I just picked that one kind of, whatever. I needed something to be able to work off of. This is a real stock. It's called Bank of America. And I took this screenshot last night, and I took the screenshot specifically of Bank of America because Bank of America was sitting directly at the 38 level. Oh, I'm sorry, it's 2 cents off. But I took that at night and was like, yeah, it was perfect. It was like 38 bucks. I was excited about it. Doesn't take much to get me excited. So what I wanted you to see in this example is, okay, you buy this stock. So you're buying it at 38, okay, 40 and 37, okay? What do you mean 40 and 30? That's your target price, and this is the stop, correct? Just take you through the logic. What's the probability of touching 37, for instance, in the next 24 days? I'm using 24 days because I think it's just a good example because people use stop orders all the time. I have an answer for it. I have an answer for it. Look at probability of touching, come down here, and the answer is 72%. Okay, versus what's the probability of touching the 40 level? I have an answer. I have an answer. Okay, 43%. So what's your probability of being stopped out at some point in the next 24 days? 72%. And of course, you're going to ask me, are those probabilities accurate? The options are pretty accurate. It's like one of the most heavily studied areas in the entire marketplace. Option price is probability. This unequivocally has a 72% chance getting stopped out anytime in the next 24 days. How does that grab you? Doesn't matter if it's 24 days. By the way, the probabilities would work the same for 3 days, for 10 days, okay, for 17 days. I just picked the standard expiration because it's clean, it's nice, right? How does that make you feel about your risk going to be able to make too? You go, well, I could still make money if I was right more than I was wrong, but wait a second, this is going to actually bleed you out. Think about this, risk versus reward. In the aforementioned Bank of America, the probability of hitting the stop is 72%. The probability of hitting the target price was 43%. A risk one to be able to make two scenario is actually a setup for a low probability disaster. It actually, you can be right. And here's the whole key to this. Here's the key to this is people, they say, it's okay, man. It's okay because I'm going to be right a lot. In this example, being right even 60% of the time is not going to see profitability. You're going to have to be right like 80+% of the time after, like after everything to make money when you're getting stopped out 72% of the time. Okay. Now, somebody said, I want to risk one to be able to make three. It's even worse. You risk one to be able to make three. You're going to have still like almost a 70% probability, okay, versus what? A 20% probability of being able to make money? Think about this for a second. How many people have actually fallen into this trap? Okay, anybody actually find this? Where you're getting stopped out and stopped out and stopped out much more often than you're actually hitting your target price. And it's all about number of occurrences. If somebody actually traded one time, be like, no, man, I made money. Okay. If they traded 5 times, no, 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 no. Me right 5 times. Yeah. Okay. I've been in the business since 1998. Okay. I tell you my accuracy level, flip a coin 50-50 out there. I'll tell you, after you've actually done hundreds or even thousands of occurrences, mathematics of trading never lie. That's what a quant basically does. Right. The mathematics and the probability, they don't lie. One of the most essential areas of your success in this business is just understand a simple example like this. Because once we actually take you into the simple examples, is everybody okay at this point? By the way, would you like to see it in another underlying? It's okay. I'm reading in here. You guys can throw in stocks over there, okay? And by the way, there's nothing to do with average, true range. Forget all that. It never matters, okay? Just look purely at the probabilities. And again, any major like platform is going to have this. If I come over here, this is Bank of America, by the way. Look where Bank of America is trading. As I said, I took a screenshot last night on Thinkorswim. This is Tastyworks. I like Tastyworks. Okay, I do. This is actually from the founders of Thinkorswim. This is Bank of America. Look, it's still sitting basically at 38, and you can pull up probabilities. But maybe you don't want to do Bank of America. And you're like, how do you pull up probabilities? You can open up option chains, all the option chains you want. Don't let this stuff intimidate you. There's delta. Look at this. There's touching percentage. It's the probability of being touched. Oh, I've been touched. Okay. And you can see the probability of being touched here. It's inordinately high, versus here. I just brought this example up. This is the live market now. Now it only has a 65% chance versus a 43% chance of hitting 40. Yeah, but the stocks actually move up like 17 cents. Okay. Of course you could do this in the SPX, right? And yeah, every single product over there. By the way, I'm an SPX guy. That's my baby. Okay. So any platform pretty much has this, and you name an underlying. And again, if you guys have underlyings that you want to look at them. This is FXI. This is actually the Chinese large cap marketplace. It's Mr. Toad's wild ride lately. Nevertheless, you look down the list, some of the usual suspects. Okay, it's on, people. Once you understand probabilities, I'm telling you, it's going to open up your mind to so much more. You can't just trade on what you think. You can't live that way. What do I think? I guess I'm going to be honest with you. I think that eventually you're going to be wrong, and you're going to be wrong too many times, and it's actually going to wipe you out. And a lot of people are finding that right now. Look at the number of trades every day. It's going down. Want to know why? Marketplace got a little bit sketchy. Now, let's position your portfolio with the right trade logic. Now we're actually going to talk about trade logic. And I say, let's get down and dirty. How do you position yourself most effectively without exposing yourself to drastic risks or low probability? We need higher probability, low risk, higher probability, low risk. Okay. So here's the strategy. And I'm going to present a strategy that does the following. And I'm just going to, throw this out here. Number one, we have to overcome the high probability of being stopped out. That's number one. How do we do that? First of all, we're never going to use a stop. How about that? How do you overcome the high probability of being stopped out? I have an answer, sir. Don't use a stop. Okay. Number two, and by the way, I spent 15 years in the brokerage world, 15 years in the brokerage world. And I'm never going to tell you a good story about a stop order because I've never heard one before. You're like, but it stopped out and saved me a fortune. But once you understand this logic today, I'm going to ruin you. Number two, I want to define my risk. I want to know exactly what my risk is. Bottom line, okay? Can I lose $100? Can I lose 1,000? Okay, you want to know exactly how much risk you're going to have, because if you can't define that before getting into the position, okay, then you're going to have that constant nervousness. You're going to be up late at night and be like, the market's tanking. The market's tanking. Don't say anything bad, Jerome Powell. You're literally like watching, the Fed speak, and you're like, Jerome Powell, Noonan, don't say anything bad. Provides a high probability of success, limits capital exposure. By the way, limiting capital exposure is a little bit different than defining your risk. Okay. The capital exposure is the best use of your capital. So we don't want to allocate too much because we want more capital free to do more trades. And we're never going to buy or sell the stock. Okay, period. This is what we're about to step into. Enter the in-out spread. In-out spreads are by design, limit exposure. I'm going to just level with you guys right now. In-out spreads, yeah, they're option trades. They are options trades. And as I said, I'm not going to be here to shove options down your throat. We're going to go out. We're going to teach you a very straightforward options trade. The complexity of it, I'll reserve a little bit. But even for those of you that experienced options traders, like some of you are experienced options traders. And yes, I keep looking over at this monitor because you live on this monitor. I live on this monitor. Anyway, even those of you that are experienced in trading options, and how many of you are experienced in trading options? I promise you'll learn a lot from this today. This is again, it's gonna take you a little bit to work through, but fear not the options. As option spreads are going to let you limit your risks without the use of stop orders. And I'm telling you, this is going to provide you really considerable upside potential. So let's start to break it down. I'm actually going to take you into a little bit of option basics, okay? And then we're going to work forward from there. You guys ready? So if you have no options experience, watch this example. If you have a lot of options experience, okay, you're going to grab the little nuances, okay? And again, there's always going to be people on both sides of that coin, and I don't want anybody to think that, oh man, I'm not going to get enough from this today. You're about to get a lot from this. So all right, I'm grabbing a seat here because I'm actually going to draw on the screen a little bit and try to explain this best we possibly can. So I'm initially going to take a stock, and I am never going to own the stock. And I'm just letting you know that right now. Let's use a nice, clean, fictitious example. So we're going to take a stock. We're going to say, by the way, every fictitious stock in my book is stock. And let's say stock is trading right smack. You guys want to make it 200? Yeah, let's do it. It's trading right at 200 bucks. Because everything these days is like $200-300. And it's frustrating because the more stocks, okay, sorry, I'm adjusting my seat. The more stocks that are trading at 200, the more you kind of feel like you're like, man, I'm like almost priced out of the marketplace. This is rough. So the stock is trading at 200. I'm not going to trade the stock. I'm just going to trade options. Which options I'm going to make trade? And we're going to assume that in this stock is going to have dollar strike increments. So I'm going to give you a couple of different things. First of all, we're going to go out, all right, and we're going to trade a strategy. Let's make this one for 1 month. Options are good for a period of time. In this case, it's going to be good for 1 month. What I'm initially going to do, okay, is I'm going to go out and I'm going to buy, you ready for this? A 199 call. 199 call. Now, I'm going to attach a price to that. I'm actually going to go out there and I'm going to buy it, and I'm going to buy it for a whopping $4. Okay, $4, $4, $4. So let's put that down here. We're going to buy, okay, 199 call, and it's actually going to be trading for $4 debit. Great. Now, before I go any further, let's talk about a 199 call, because there are some people in here that anybody here brand new who's never traded an option before? Okay. Anybody here brand new? Never ever traded an option before. Okay. Because if you're brand new, never traded an option. Excellent. By the way, I'm probably going to go. I'm probably going to go. Oh, I would say 90 minutes or so today. I added some slides in here. Market's open. We're going to trade. We're going to trade live here in a minute too. So 199 call. 199 call gives you the right to buy the stock at what? 199. Do I want to buy the stock? No, but I have the right to buy the stock at 199. So let's say the stock is trading at 200. I have the right to buy the stock at 199, and the stock goes to here. Let's get crazy. Let's say the stock goes all the way up here, 210. So if I have the right to buy the stock at 199, okay, now the stock's trading at 210. What's the 199 call going to be worth? Okay, and you go, I don't know. Well, if you have the right to buy the stock at 199, could you buy the stock at 199? Yes. If you bought the stock at 199 and then sold it to somebody else at 210, how much would you make? You'd make $11 minus the $4 it cost you to get in there. $4 to get in there, though, was expensive, wasn't it? Right? So all you have to know about the 199 call, okay, is that it gives the right to buy the stock at 199. But at the same time, you have no intention of buying the stock at 199. You're just buying the call because later you want to be able to sell the call, right? All right, so we buy the call. Now, simultaneously, that means at the same time as you buying the 199 call, okay, you're going to, in this case, sell, okay, a 201 call. And that one, I'm actually going to collect, and I'm going to make this a nice, round, easy example. I'm going to collect $3. Now, before you freak out on me, here, let's put this down below. We're going to sell a 201 call. We're actually going to sell that for $3. So we're going to net this out. The trade's actually going to cost me $1. Okay, and this is a $1, what we call debit. Hold on there for a second, cowboy. I sell a 201 call, and you go, wait, hold everything. How did you sell something you never owned? Options, in options, Buyers have rights, sellers have obligations. Buyer has the right to buy the stock at 199. Seller of the 201 call is then obligated to give somebody else their stock at 201. Do you own stock? No. Do you want to own stock? No. Are you ever going to own the stock? No. Why are you selling the 201 call? Because I'm just giving somebody else the right to take my stock from me at 201. But you don't own stock. No, but I do have the right to buy it at 199. So if I have the right to buy the stock at 199, but I have to be forced to give somebody stock at 201, what's the most I can make? Come on, give it to me. What's the most I can possibly make in a $2 wide spread? Right? What's the most I can possibly make in a $2 wide spread? Okay. Most I can possibly make in a $2 wide spread is $2, of which I've already paid $1 up front. So wait, because here's the whole thing. And some people are going to see this and some people won't. Okay. This is such a cool example because when it's clean like this, it just works out very, very nicely. But in this example, I'm going out and I'm literally risking one to make one. And you go, what? I'm risking one to be able to make one. Risk one to make one. Risk one to make one. You go, why would you ever want to do a trade where you risk a buck to be able to make a buck? Because if you risk a buck to be able to make a buck, wouldn't that defeat the purpose? Because if you did 1,000 trades and 1,000, whoa, don't even go to the 1,000 trades yet. You risk a buck to be able to make a buck. How would you make money in that scenario? You tell me. Think about this. Does everybody understand the logic? The most you can make in the spread is $2. You already paid $1 up front. So you're risking exactly $1 to be able to make $1. And I'm telling you, unequivocally, not only is it okay, it's phenomenal. Why is this phenomenal? Do you see it? Okay. And most people do not see this initially because they don't look at the marketplace from a probability point of view. Okay. Probability of you making the dollar is considerably higher than the probability of you losing the dollar. So a lot of traders are well known this. Some traders go out there and they go, yeah, I'll risk one to be able to make one all day long as I have edge. What's the edge? Okay. Here, this is where the stock starts. Let me actually change the color in here. Change the color. Okay. This is where we start. What can happen during the livelihood of this game, of this trade? Okay. Here's the life of the trade. How long is the life of the trade? 1 month. Now, I'm going to tell you guys right now, in no way, in no uncertain terms, okay, I can't stop you from loss in here. You're going to have losing trades. But over the next month, things are going to be interesting. God, what can happen over the next month? I'm going to tell you exactly what's going to happen over the next month. Does this trade have a stop order? No. Why? Because the most you can lose is $1. Do you need a stop order? Do you need to further define your risk on an already defined risk trade? Of course not. You have $1 at risk. Okay. You put the dollar in the trade. I'm going to tell you exactly what's going to happen. The moment you put this trade on, the market goes down. Now the market's down here. Where's the market? The market's at 195. And you look at the trade, you go, oh man, this is not working. Okay. This is not working. That happened 2 days after you put the trade on. About a week after the trade, and the market's right back at 200. And within what, another week or two, it's up here at 205. Guess what? Normal volatility fluctuation. Somebody says, when do we get out of the trade? You get out of the trade when you're profitable on the trade. What happens when you lose? You lose. But the probability is that during the life of the trade, stock's going to oscillate up and down. You just exit the trade, okay, when it's profitable versus loss, which actually makes the probability of making the dollar inordinately high versus losing the dollar. Does everybody get it? You're going to see it now in much more context. Time out. We good? Okay. Okay. And people like look at like what's edge? What is the edge? Probability is your edge. The ability to actually withstand the risk in the trade is the edge. Now there's other edges in this particular trade, which has to do with gamma risk and there's no volatility exposure. This is actually a great trade though to explain people the simplicity of an edge doesn't necessarily have to be like people are always looking for like, is there free money? Ain't no free money in this business. But if you can get a probability advantage over another trader, why wouldn't you do that? I mean, this is the premise that trading firms use every single day. If you're looking for like, the holy grail of probability, okay, there's no holy grail that says like free money here. The holy grail is understanding risk reward, okay? Understanding that the probability keeps you embedded in the spread. Now, okay, let's take this from our fictitious example. Let's make it real, okay? In-out spreads, Bank of America example. So earlier, I showed you this risk one to be able to make two kind of synopsis, right? And the risk one to make two, you were getting stopped out and stopped out and stopped out. How often? About 72% of the time, you were going to get stopped out. So how can you overcome that? Okay. Bank of America wasn't just a fictitious example. It's real. I'm actually going to show you the exact numbers right now. So let's continue our Bank of America example, but in this case, we're going to use an in-out spread. So rather than buying the stock at 38, which is ridiculous because buying stock at 38 is going to tie up a lot of capital, we're going to use a spread to limit risks and provide a much higher probability. So let's go into it. Bank of America. Okay, so here is Bank of America. Now, Bank of America, roughly speaking, is trading at 38. Now, I just made this example exactly like the previous fictitious example, except these are real numbers, which you're going to see here momentarily. Okay, Bank of America is trading at 38. I'm going to buy a 37 call, and I'm going to sell a 39 call. How wide is that spread? $2 wide spread, right? It's $2 wide spread. Now, you're actually paying, okay, 205 and selling this little monkey for $1.05. Net, about a $1 debit. About a $1 debit. Okay, so let's just blank this out for a second. What is the most that you can possibly lose on this trade? You tell me. All right. What's the most that you can possibly make on this trade? Okay. The most you can possibly make. All right. Well, first of all, lose is $1. Most you could possibly make, $2, of which you paid $1 up front. So what you have is a risk one, again, to make one. So it's a risk one, make one, exactly like the previous example. Okay, so what has to happen on this example? At some point during the life of the trade, we have to rally up a little bit. Okay, at some point during the life of the trade, how much do we have to rally? Above 39. Above 39 to actually see some profitability, even further to actually see full profitability on this particular trade. Okay, what don't you like about it? I don't like having $1 at risk, but there's no stop order. So what can happen during the life of this trade, and this is the point that everybody seems to miss about it. You can be dead wrong. You can be dead wrong, and you're like literally lying dead at the bottom of the pool. Your dollar is gone. And then right before expiration, stock pops back up and you're golden. Okay. Now I am actually portraying this as right now a bullish example, but there's no reason that you can't do this bearish. In fact, bearish trades price phenomenally in this marketplace. So I stress to you, there's absolutely unequivocally no reason, okay, that you can't do this thing bullish or bearish. So you've got a bullish or bearish trade. Now, when you think about this from a probability point of view, as I said, there's an inordinately high probability at some point we might trade up here at 40. There's also an inordinately high probability that we may trade to 36. Okay. When do you exit the trade? When you're up at 40. There's actually an incredibly high probability we trade both 36 and 40, for instance, in the next week or two, right? Or even more than that. Okay. So are we okay at this? Are we okay at this? Again, I got to stress, okay, I got to stress, you have $1 at risk. If you do one contract of this trade, for those of you that don't necessarily trade options, don't know options, if you do one contract of this trade, you realize you can only lose $100. I can find these trades all day long in the marketplace. We're going to do that here momentarily. We can even trade around earnings if you want. Facebook has earnings. We'll look at that here momentarily. You guys tell me, huh? Bullish, bearish? Okay. This is why, okay, you want to use in-out spreads. So it overcomes the high probability of being stopped out. You're not getting stopped out, define your risk. Okay. Defines your risk to what? $1 limits capital exposure. If I did one contract, I have $100 at risk. What's commissions? People used to always bark about commissions in these trades. Commissions are negligible. Some brokerage firm platforms are free. I mean, but I'm paying 65 cents a contract. So commissions, what are we? $1.20, $1.30 over there. You never need to buy or sell the stock. You don't have to buy or sell the stock. You're not going to get put anything. You're not going to get anything called away. You can alleviate all those risks. You go in, you risk a buck, you either come out beautifully or you're going to lose $1. Okay. Provides a high probability of success. You can initially be wrong, dead wrong, and still come out ahead. How many strategies can you say can do that? Right. By the way, this is it. This is actually the real pricing. This is a screenshot, again, that I took last night. And one of the things that I try to emphasize to you is, I don't do fictitious examples. I work with the dynamic of the marketplace. Bank of America last night was trading at 38. You can see the exact pricing of the spread. Okay, it's right around $1 debit. That's your max risk. Okay, what more do you need to see? Right? Here's the best part of this. This trade last night that I put together was for 52 days. Do you think that in the next 52 days that Bank of America could move both up and down? Uh-huh. Could Bank of America get down all the way to 36? Of course it can. Can it get all the way up to 40? Yeah. Okay. And that is more than enough to see profit and or loss. We just hope that we hit 40 well before 36. But if we hit 36 first, that's fine. We know what our risk is. Our risk is $1. Sit tight. Okay. Let the market work to your favor. And I cannot stress this enough that when people are looking at these types of trades, the numbers are right in front of you. Okay. Now we can actually build this all day long. And somebody said, can you do it intraday? Of course you can, right? We can build this all day long in here. Now I'm going to give you a couple more examples. You guys tell me what stocks might you want to be able to place this on, right? Because in-out spreads give you the power to trade massive stocks, massive index products with just pennies at risk. So here, what our members are saying, okay? Mariano, out of my second QQQ, in out for 30%. Paul, okay, I made good money in the QQQ trade. Thanks, Don. 30% in out spread, okay? This is a closed QQQ for $1.09. Tried really hard to get $1.06, but actually got out at $1.08. Okay, here, we're actually going to go into a few live trading examples. In this particular case, I'm actually going to cruise over to the Thinkorswim platform. By the way, I'm watching the market on another screen and I see the NASDAQ dropping like a rock. What stocks do you want to do this on? So somebody said Amazon. Okay, now Amazon can be a little bit formidable. Now I'm going to build a trade in Amazon. I don't know if I'm necessarily going to route into Amazon, but a big portion of this today, I want you guys to know, I'm going to do trades live. Okay, I don't sit here and talk about it. Normally when I come onto these presentations, I show you, I did this trade, I did this trade, I did this trade, I did this trade. If you guys have ever been to any seminars that I've ever done or any sessions I've done, I'll show you 500 trades that I've done in my account. I decided today, forget any of the trades that I've done in my account. I've got tons of trades on right now. Okay. Tons of stuff on. Okay. I don't mind showing you, look, I'm down $1,000, but still my heart. Okay. I have hundreds of thousands of dollars working right now in here and at the marketplace right where I want it. We're fine. Okay. But again, there's no holds barred trading here. We show you everything, whether I'm profiting, whether I'm taking a loss in this, but I wanted to show you trades that are here and now. If you look at something like Amazon, I would be remiss to say I would wait until before the earnings if I was going to place this for an earnings based trade. I wouldn't do it just yet. And I can open up an option trade and I can do a trade for 2 days, for 9 days. Okay, let me show you. Like, do you want to be bullish or bearish? Come on, it's Amazon. Let's do a bearish one. Let's do a bearish one. Don't tell anybody. Don't tell Bezos. He doesn't even run the company anymore. Don't tell Bezos. Yeah, here's a $5 wide spread for 273. You want to be bullish? Somebody says, I want to be bullish. Okay. Holy smoke, there's skew is inverted in here. What that basically means, call spread. This trade, this is a $5 wide spread. It's trading dirt cheap relative, okay, to volatility right now. Dirt cheap. It's things like a $1.80, $1.88 prices moving around. But that's it. If I did this trade, and I want to hit the confirm and send for a second. In fact, trade's already dropped in price. Look at how fast it's moving around here. Okay. Max risk in here would be $125. It's $125 of risk. My commissions would be $1.30. Okay, stop right there. What else? What has earnings tonight? Something like Facebook. Okay, Facebook has earnings tonight. You guys want to do Facebook? Literally, I asked for stocks. I'm going to trade live, and like 2 people came in, and both had actually Amazon in there. So that's it. That's all you guys want to trade. Okay, it's my capital. Don't worry about it. I'm actually going to put the trade on Facebook, and you guys can determine whether you're bullish or bearish. Again, not going to sit here and patronize you with different trades and so forth, but I'm not going to show you any historic trades. I want to show you trades that are in here live now. Okay, I've got stuff on Tesla. I've got stuff on Apple right now, and I'll tell you what, I can put stuff on Facebook too. Let's go actually look at Facebook. If I were doing an earnings-based trade on Facebook, okay, I would do an earnings-based trade on Facebook. Do you want to be bullish? Do you want to be bearish? Okay, this is a $5 wide spread for a 250 debit. Okay, if I wanted to be bullish right now on Facebook, could I do this? Absolutely, unequivocally, yes. Hit confirm and send it. Filled. Okay, done, filled. So what do I have? I have a bullish trade on. Specifically, this one's just for earnings. It's for tonight. But maybe I didn't want to do that. Maybe I wanted to look a little further out in time. I look at something like the QQQ or the S&Ps. Maybe I look at the Qs and I go, they're up pretty big right now, and maybe I come a little further out in time. Okay, and by the way, I'm using really finite criteria because you can see right now, position, 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 position. I've got a lot of positions in here right now. So maybe I come out here. I'm actually going to cruise out some right to the September 1st expiration. September 1st expiration. I don't like that one. Fit my criteria. Okay. We're going to go into the 30-day expiration. Maybe I want to be a little bit bearish for the marketplace at present time. If I want to be a little bit bearish, how could I do it? Okay. All I'm doing is just loading up a bearish put spread. And again, you can't be afraid of a trade that's what? It's $2 wide spread for 79 cents. If I do a one lot in here, 78 cents. If I do a one lot, I can't lose more than 78 bucks plus my transaction costs. Fire. Okay. Look, it's working. It's working. Again, you got to get comfortable, really comfortable with, executing upon what you see in a marketplace. And when you have such minimal amounts of risk, it's the only way you can get that degree of comfortability. And by the way, look, this order is working right now. When I say it's working, it's working. There's no reason to rush out and try to fill this trade. I'm actually going after a 78-cent debit. Okay. Current market is 77 cents. So maybe I fill, maybe I don't. Give it a little bit of time. Let the trade work. If it doesn't fill, you can hit cancel replace. Look at this. I'm going to cancel replace. I'm going to stuff it in their face at the exact same price. Didn't even get a chance. They already filled me. Okay. Right. And I can come in here and say, yeah, you know what? I liked it so much. I'll do another. Okay. Oh, I cancel replace that one. Sorry about that. Okay. I'll do another one of these. We're going to come in here now. And we're going to create a duplicate order. And I'll fire this one as well. Okay. It's all about comfortability and about creating. Like, again, if you can't pull the trigger, then it's for nothing. So I've got what? I've got one bullish trade on Facebook, a couple of bearish trades in the QQQ, and we just keep going from there. All right. We're going to spread a little bit of capital around, but everything I'm doing is define risk. And it's giving me an incredibly high probability. Like for the next 30 days, and I just did a 30-day trade. I could have come all the way out here to 51 days, but I already have positions out there. But for the next 30 days, you realize I don't have but $78 at risk. I just did 2 contracts. So let's call it commissions and everything. Okay. What? $160 at risk for the next 30 days. Okay. In any time in the next 30 days, if the QQQ sells off. Okay. And by the way, the alerts are coming through on my watch right now. Anytime in the next 30 days, the QQQ sells off a little bit, old Jerry gold. And okay, on top of it, I wanted to show you a way to take just a quick earnings trade. So why not, take an earnings trade here? I'm actually going to take a position probably in PayPal later today, which also has earnings, possibly even Qualcomm, which has earnings. And tomorrow night, I'll look at something like Amazon. People, this is the way you have to learn to trade. Because if you're going to take a bullish position in Facebook, okay, I think it's smart to have my bet a little bit hedged, taking a bearish position inside of the QQQ. Work the spreads together. All right. And again, this is why I kind of say and emphasize duration over direction. I'm not going to sit here. I am not going to sit here again and patronize you and tell you that I'm going to be right in the QQQ. This isn't about being right or wrong. Okay. I just took a bearish position in the QQQ. You go, what are you, crazy? That QQQ goes nothing but straight up. Come on, in the next 30 days, at some point, it's going to pull back a little bit. I'm telling you right now, you need to learn how to do this stuff. You need to learn how to execute these in-out spreads. Okay. The probability of profitability is inordinately high. But if you look at the foreseeable future, I mean, you're trading in a wildly intense and what is going to be even more volatile, in the coming days and months. I mean, forget the Fed. The Fed's, they're not going to do anything. Okay. Everything right now, though, is literally about movement of the marketplace, about volatility picking up, and it's about sustainability. I'm not going to tell you to be bullish or bearish. I'm going to tell you one thing. If you want to be bullish right now, you better use spreads because God forbid that you should be wrong. Do you know how fast this marketplace can go down? Okay. People right here, right now, there's almost 1,000 people, in this seminar right now. People right now are going to have hundreds of thousands of dollars tied up in NASDAQ and S&P stocks. Okay. You could just use a spread. You think about how much risk you can mitigate by just having used a spread instead of going out and having hundreds of thousands of dollars. Somebody in here unequivocally owns Apple. Okay. They have a bullish position in Apple. So do I. I have a bullish position in Apple right now in one of my accounts. It's down today. Okay. What am I down? A couple of bucks. And then out spread. And guess what? Over the next few weeks, if the stock bounces back, gold. We're going to be fine. And that's, one of the keys to it. You're wrong today, right tomorrow, it's fine. Okay. Most people can't sustain that kind of stuff. Again, that's why I wanted to do a couple of live trading examples. This is about trade execution. It doesn't matter. It doesn't matter like, the umpteen spreads. Okay. In a given year, I may do hundreds and hundreds of these in-out spreads in a given year. Okay, because I'm much more comfortable doing this than going out and just slinging stock and getting bullish or bearish. Okay, I sell premium, and on the inside, I actually buy and sell in out spreads. I'll tell you right now, okay, what better time? I'm telling you right now, you have got to learn to do this stuff because this is a skill set you're going to need for the foreseeable future. Okay, and it's just that's the bottom line. You got to have this in terms of the skills in your tool belt moving forward. If you can't mitigate risk, people look at this and they go, "I'm just going to go out and buy a call." You're going to buy a call. You're subjecting yourself to volatility risk. You're buying a call. You know what call has? Call has time value. Okay. I want to show you one last thing because I say, what better time to learn this? One last thing on this in-out spread. I was talking about Apple a second ago in the QQQ and Amazon, but let me come back. Let me come back, for example, to a Facebook trade. Okay. And I'm going to show you the Facebook trade because I literally I filled the Facebook trade. Okay, I filled the Facebook trade, and I know that Facebook has earnings coming out. Look, the Facebook trade is trading for 250. Okay, I'm even going to unlock this lock. I'm going to unlock the lock and let it float. It's really at 245. Did you know you can go all the way out to September and the trade's going to cost basically the same? Okay, I'm going to go all the way out. I'm going to get crazy. I'm going to go all the way out to October, and the trade is trading for the same price. Time value, okay, is offset by the in-out spread. More time does not necessarily mean that you're going to pay more for the trade. Okay. Like how else can you display a strategy? The strategy is impervious to time. The strategy doesn't have any volatility risk. If volatility spikes, so be it. If volatility collapses, so be it. All you need in this strategy is the market to move your direction for a brief and fleeting moment. But it's not about market direction. It's about the right strategy, the right trade logic, and the right probability. As I said, okay, when are you ever going to have time like this again? Most people are still working from home. Okay. We have a lot of people, once again, that are back under quarantine. You've got some time. I'm telling you, play around, okay, with these in out spreads. This is the time because you may never have time like this again in your life. You want to be able to emerge from whatever we're coming out of in the next year, 2 years in better financial shape. If you look at the idea and you think that there's huge inflation coming, get wild and woolly, but do it with in-out spreads. One of our members is saying, you won't find a more supportive, more profitable room anywhere in the retail business. Don helped me pay for a year of Theotrade subscription with QQQ. Okay. Listen, each and every trade today, okay, was displayed live at Theotrade, meaning that I execute and post these trades, and we even text these trades out to the clientele. Some of the trades that I just executed a moment ago, we will literally text out to our clientele. But this is not like a full-time job. Somebody asked me already, could you do this intraday? Okay. And the answer is, yeah, you know what? You can. You can absolutely unequivocally do this intraday. If you want to trade more actively, though, okay, that's sitting in front of your screen. But what I'm showing you today is much more, and I'm intending this to be hands-off. In-out spreads are like literally a set and forget. You put the trade on, you have your dollar of risk or your 77 cents of risk, like I did in the QQQ. Okay. And then just set the target price. We will give you a target price to be able to exit the trade. You exit it, you move on. Okay. Fraction of your time is going to be enough to see the results. And again, we text out the trades, we use push notification, anything to make sure that you understand that the trade is out and on. Characteristics of in-out spreads. The attributes, I think, are undeniable. You never have to buy or sell the stock. You define your risk. Risk is limited to precisely your comfort level. You don't have to use a stop order. Okay. You can vary time frames. You don't necessarily pay more. Probability of profits high. It's a perfect spread, though, to reduce stock portfolio risk. As I said, a lot of times I do these webinars and I would show you hundreds of trades that I've done. And in this particular case, like everybody gets the in-out spread immediately. It is unequivocally the most prolific examples that we can provide you is to get you to understand spreads, understand trade logic, and we'll move you forward from there. I mean, there has to be a basis of what you do in this business. You got to understand trade logic and risk mitigation first, and then we can actually build upon that. In-out spreads, okay? In-out spreads, even though it's like the entrance to trade logic, this is the basis of all trade logic. Like this is where you have to begin in this business, especially when trading options, and so few like individuals get this simplicity of risk a buck to be able to make a buck, but having a higher probability of making the dollar. Okay. And that's huge. Again, you can vary timeframes and not pay more. The probability of profit is it's inordinately high versus losing the dollar. Okay, um, and it's an excellent tool if you're looking to build a smaller account. That's one thing. That's one thing that I really stress to you as well. Like when I'm saying you're trying to build a smaller account, you're trying to build up your account. Okay. You can have as little as $2,000 in your account. You can actually build using in-out spreads. And you can never say that I only have 2 grand in my account. I just did a trade for 78 bucks. Okay. And that's comfortable for me. And I have hundreds of thousands of dollars in my account, but that's neither here nor there. You got to have a $2,000 account. Boom, 78 bucks. That's it. That's all the risk. Okay. You can build up the account that way, but at the very least, you have to execute. Trading is a sport. And I got to get you involved in the sport if you're going to be successful. You can't read a book. People, I'm just going to read a book. I'm going to read something on Google and it's going to tell me how to do this. You actually have to play along. You have to be able to execute. And that's one of the reasons I like to do some of the live trades, building the in-out spread. Now, some of you guys are brand new here. Okay, brand new. Do not, in any uncertain terms, do not allow options to intimidate you. Options, listen, options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. Okay, there's a little bit of a learning curve though. And I always use the same analogy whenever I talk about options. I always think about like, if you wanted to go out there and you wanted to cut down a tree, and by the way, I'm looking out the window and there's a I live in the mountains here, gigantic pine tree. If you wanted to cut down this huge pine tree, you would absolutely have to use a chainsaw. If you don't know how to use a chainsaw, you can get hurt. Options, the same thing. I mean, options, as I said, they're going to be quick, they're going to be safe, they're going to be easy. You have to use them and use them correctly. You got to learn to construct the right spread, okay, and how to actually execute into the trade and how to execute out of the trade. Used incorrectly, you might cut off a couple of fingers. I mean, the spread below is a dollar debit. There's not much else to say, okay? You can do in-out spreads. Limited time, limited experience. Again, don't let the options portion of this intimidate you. You're going to need, and I was stressing this earlier, and I can't stress this enough. You're going to need foreseeable strategy, okay, to the future. You have to. We're going to be volatile. And how can you possibly say that, Don? Like, you can't see the future. There's one thing we can tell you without unequivocation, right? Okay. In terms of economic guidelines, all the Fed right now is talking right now. All the Fed is talking about right now is doing what? Eventually, they're going to have to raise rates. Eventually, they're going to have to taper. Okay. There's all these spending bills that have been done. Okay. Eventually, they won't have as many of those. It's as good as it gets. The future is clearly volatile. Either we're going to hit patches of inflation or the economy is going to dive again. In either scenario, I don't care whether you think that huge hyperinflation is coming or it's already here. That's going to strike volatility to the marketplace. Or, nope, the economy is absolutely, we're going to stagflation, baby. I mean, I love the argument because it's both paths are volatile. You're going to have to mitigate risk. Going out there and buying a bunch of stock, I think is going to be and fall by the wayside. And you realize that with, most people today, even kids getting involved in the marketplace, they're trading AMC and GameStop. They're crazy, man. They're just going out and buying calls. Crazy. Think about how much better they would do using spreads, right? We can show you how and when to place these trades. It takes a matter of a few hours because what we do here at Theotrade is we create detailed recipes, okay, which are for the strategy. There's an actual recipe. It's criteria. Okay, for the in-out spread, it's incredibly definitive. It's the most refined criteria of any strategy that we present here at Theotrade. The in-out spread, we've spent by far and away the most time. Okay, and I just make this mention of this, like, you wouldn't bake a cake without a recipe. Why you trade without one? This is what you need to know to successfully enter and exit in-out spreads. Okay, so what do you need to know? What volatility should you seek out? Okay, what underlying stocks or indices make the best in-out spreads candidates? So you think about this. Let's start with this. Where's a good place to do in-out spreads? I just did one on Facebook. I did the QQQ. We could do the spiders. Okay, what else you got? Okay, what else you got in here? And again, I can go on and on, the different strategies and so forth, but you have to be able to pick a viable candidate. Candidacy is everything, right? And that candidacy is very largely based on, volatility. Volatility. Too much volatility, you're already dead. Okay, too little volatility, stock's not going to move enough. There's actually a sweet spot, literally a sweet spot for volatility. We show you how to find that. Okay, And again, I stress to you, if you take a quick glance, at an option chain, right? Hey, here you go. Here's Facebook. It looks pretty good. Yeah. So there's a definitive volatility that you have to follow. Too much volatility. You're like, well, what could possibly be too much volatility? There's a ton of products that are just wild. So you're going to have to know exactly what volatility you should seek out. Next, what options expiration do I select? Okay. A moment ago, we were also talking about an example on Bank of America. In Bank of America, when I actually took the screenshot, I did the trade 51 days out. I'm going to tell you right now, it's actually really far out in time, really far out in time. A lot can happen between now and 51 days. But you're like, but the trade doesn't cost me anymore if I do it that far out in time. That's true. Okay. Okay. It's also really far out in time. Good things can happen and bad things can happen. Maybe I should select a little bit tighter in time frame. Okay. Bank of America, there's only a $38 stock. Okay. Why do I have to do this in a $38 stock? You don't. Couldn't you do this in something like Google? Absolutely. Could you go further out in time in Google? Yeah. Okay. Could you be bearish in here? Look at this. This is a $50 wide spread, people. $50 wide spread. It's crazy. Okay. Come in here, go 30 days. Check this out. This is going to be a $10 wide spread. I'm doing a bearish trade, $10 wide spread for like a $5 debit. Okay. It's great. Move on. All right. You need to know though what options expiration to select definitively. Like there can't be guesswork when it comes to the option expiration. We tell you exactly which one. Okay. What should be the delta of the option I buy? Okay. What options do I sell against my position? So obviously in the spread, there's one option you buy and one option you sell. You have to be able to fine tune that. And there's underlyings that you're going to come across. You can't do the spreading. And you go, what do you mean you can't do the spreading? There are underlyings that you cannot do spread in easily right now. Okay. And there's other underlyings that make better candidates. And it has to do with the delta of the option you buy and the delta of your option you sell. How do you actually build a trade? I mean, literally, like, what do you click on to be able to build a trade? Okay. What amount of capital do I need in the account? Do I need a larger amount of capital? Absolutely not. I mean, we just talked about a moment ago. I did a trade. Literally, I did a one lot. A one lot. Captain one lot rides again for 78 bucks. That's it. So I have $78 at risk plus the $1.30 in transaction costs. I don't need a large amount of capital. Okay. You can do this in a retirement account. Don't ever let your broker tell you that you can't do this in your retirement account. You absolutely can. You can do anything you want now in your retirement account. Anything you want in your retirement account now. You can sell options naked in your retirement account. You just have to have the right brokerage firm. They changed all the rules. Most brokerage firms, they don't come out and say, they changed the rules. You can do whatever you want. Okay. Nobody ever says that to you, but it's the truth. You can actually, they change the rules in the IRA accounts. You can trade any strategy you want. Okay. What's the right amount of risk for me? That has to do with the account size. So what we actually have is a formula. We say the account is X, you can't trade bigger than Y. The account is X, you can't trade bigger than Y. It's pretty straightforward. What are the percentage returns supposed to be? Here, okay, that one is huge. I can't stress this enough. Get the wrong percentage return, you're already dead. You must hit certain, okay, marquee levels of profitability to make this thing work. Let me show you exactly what we do here at Theotrade. Theotrade, we create recipes in trading. Like trading is all about answering what ifs. Like if you think about getting in for one of these in-out spreads, you're thinking about what might be a good stock ETF candidate for in-out spreads. What's the correct options expiration cycle for my in-out spread? What volatility should I have in there? How much capital do I commit? What strike price options do I buy? Which ones do I sell? How many of them do I sell? And growing a small account, what should my allocation be? Allocation model is huge. You start with a $2,000 account, you start to grow the account, you get to $4,000. Okay, you have to actually slip up the scale in terms of allocation. Your capital allocation is critical. That's why I mentioned it. One of the first things we did mention, we mentioned trade logic and we mentioned allocation. So Theotrade has your answers. What we do here is we build recipes with definitive criteria. They're checklists for each strategy and each unique variable that you're going to encounter. When I say this, like, checklist, it's an actual checklist. Theotrade has the answer. As I said, we build these recipes with definitive criteria. What's definitive criteria and what's a checklist look like? I mean, it says step one, select a candidate. Step two, I'll even tell you some of it. Step one is select a candidate. Step two, Step two has to do with volatility. Step three has to do with liquidity. If it's not liquid enough, you're already dead. Okay. Not going to let you trade stuff that's illiquid. Why? Because it's just you and the market maker, and they're just out there like a salivating dog waiting for you. Okay. So I'm just giving you like 3 ideas over here. We're actually going to help you select a candidate. The candidates have to be very definitive. Okay. You can't go out there and trade some stock called Joe's Tree Cutting Service. Number two, you got to have that right volatility. It's this perfect finite volatility. Number three is when you get to liquidity. Number four, then we start going in there and actually selecting strike prices. And number five is the expiration cycle. Okay, step six, then we start to get into probability. Step seven, we get into execution. This is how this goes. And I'm going to tell you right now, we're not even into the trade yet. We get you into the trade, but then once you're into the trade, this is like going into the cockpit of a 737. Pilot goes through this detailed checklist before leaving, right? They don't just hit the throttle and go. They go through this detailed checklist. But then when they're in flight, okay, what can happen? There's a lot of variables. Same thing is true of trading. What can happen to you once you're in flight in trading? Stock can go up, stock can go down, dividends are coming, expiration is coming. Oh my, the Fed. Okay, I mean, these are all the different variables. We have answers for those. Theotrade is the answer to those questions. We'll give you the right probability. How many option contracts for the account size? When do I close my spread? What if we sell off big? What if we rally massively? Can I fix a losing trade? Trading becomes the how, the when, the why, at what price. Okay, you think about this: how, when, why, at what price. It's just the beginning of the variables you're going to face. Okay, and that is what we do here. Like, we get it. You can read what a spread is. You can go right now and you can Google a spread. Okay. 10,000 pages will probably show up. Like, literally 10,000 pages will show up and say, this is what a vertical spread is. This is not a vertical spread. This is an in-out spread. Okay. This is Theotrade's, recipe for success. And this is the absolute unequivocal. This is the marquee of strategies. I mean, this is what we built Theotrade basically on, is understanding this logic, because this is what they did not have when I was at TD Ameritrade and Thinkorswim. This is the mistakes that everybody would make. And especially when trading options. Options trading is all about eliminating, okay, all of the extraneous garbage and all those mistakes. You don't want to have volatility risk. You don't want to have, option decay risk, which is called theta. You got to eliminate a lot of the background noise. Okay. Again, some of you know how to build a spread. As I said, you can go read what a spread is. There's 10,000 pages. What you don't have is Theotrade's recipe for success. Okay. I alone have 20 years of trading experience. But the recipe in here, okay, we incorporated a lot, okay, of the other instructors into this criteria. There are eight full-time instructors here at Theotrade. We had access to client order flow for 15 years, and we've literally viewed and studied millions of accounts, okay? And again, both TD Ameritrade and Thinkorswim, which has the largest client order flow, that is where, okay, this criteria comes from. And the criteria is your recipe for success. The following strategy and corresponding criteria for the in-out spread requires the utmost attention to detail. Okay, I stress this to you. Of all the strategies, okay, that we have here at Theotrade, this is by far and away the most refined criteria in the in-out spread. We've spent years fine-tuning this particular trade. When you approach the section on following the steps into criteria, you need to follow those steps to be able to build a trade. Okay, we have a 4-hour course available on the in-out spread. It's the ultimate guide to small account growth with in-out spreads. Now, before I go any further, I'm going to tell you right now, we have an incredible incentive, okay, to view this class today. Hang with me for just a moment here as I explain this a little bit, because one of the things I want you to understand about Theotrade is not designed by any stretch of the imagination to, sell you a course and then walk away. What we do here at Theotrade is hold your hand into every strategy, okay, that you do. We literally will provide you support every single step of the way. I'll explain what that means. We also provide you every ancillary tool that you will need, okay, for success in this business. I'm going to tell you right now, if there's something you need that's standing between you, okay, and successfully trading, we will provide it. And it's just part of Theotrade. The other aspect, and I throw this right up front, let's say you go through and you watch this 4-hour course. By the way, the 4-hour course is available immediately. There's 24/7 access. We recorded the course, we cleaned it up, we packaged it. Okay, when I say packaged it, it's ready to stream. We built a platform very similarly, okay, to what Netflix has. And you can actually stream these courses at any time. You can also stream the courses onto any mobile device. Why do we do that? Because we realize, people, you can actually download onto your iPad or phone and stream the course even offline because we have our own mobile application to do so. The class slide deck that includes the entry and exit criteria, it's available immediately for download. So everybody can download that. You'll enroll for the course. But the other aspect, and I want to reiterate this for just a moment, and then I'm going to tell you a little bit more about the class. Okay, we get that when people come here to Theotrade, people have seen everything. They go out and most people buy a class for like $500, right? And I've been venture to say that the a huge amount of you have probably done this. You've gone out and paid $500 for a class, and then you end up paying $500 for an indicator. And then you probably have to pay $500 for a class to learn how to use the indicator that went with the original class. But before you know it, there's another class. We don't do any of that here at Theotrade. Okay. I'm gonna tell you right now, a class. And again, we have an incentive for you to enroll for it. We do not sell classes here at Theotrade any longer. Okay. That's not what we do. We give you, again, everything you're going to need in this business. We give you classes, we give you coaching session, we give you one-to-one email support. You can actually email us your trades, bounce ideas off of us and say, am I setting this in-out spread up correctly? I will answer your email, okay? Jeff Bierman will answer an email. Blake Young, Matt, Williamson. These are some of the instructors that we have here. All of them. I mean, Jeff Bierman's actually a professor of finance at Loyola in Chicago and moonlights with us here at Theotrade. I've known Jeff for about 12 years now. I mean, these are some of the instructors. We have Slim Miller here. All of these individuals are there to answer your questions directly, okay? Early on email over here. And that's something I'm already kind of giving you a little bit of a prelude to what we offer. But what you get here at Theotrade, I want you to know is not just about this one course. And if you have no experience and options, we actually have an entire starter package. Give that to you. Like that's, it's par for the course. You can't just jump in and be like, yeah, I'm ready to take in-out spreads. Maybe you have no options experience. I get it. Some of you are thinking, I'm too experienced for this course. I promise you, you're not. This course goes fairly deep. So the course is a 4-hour course. It's available immediately. Class slide deck available immediately. The whole thing is archived. It's ready to be downloaded, or you can just stream it at your leisure. Okay. Now, with this is the curriculum. Small account, in-out spreads, some of the key points. So you're going to learn to construct the in-out spread. Easy to learn, easier to place. Okay. Pretty straightforward. You saw me execute a couple of trades. You're going to learn also how to buy longer duration options without paying more for time. So you're giving yourself the gift of time. Number 3, you're going to learn to use defined risk spreads so that it's going to give you a great probability, okay, in the end. And it's, again, defined risk versus reward strategies. You're not going to lose sleep. I think that's one of the key points in here. Number 4 is the in-out spread can actually be used in roughly any market condition. If we're really, really bullish like we have been, fine. I guess you're going to be placing a lot of bullish in-out spreads. But when we get volatile, that's when these things really get good. I'm just going to tell you right now, volatility, that's our bread and butter with in-out spreads. Build your own in-out spread with detailed step-by-step entry and exit criteria. So one of the main points, obviously, is this. I mean, people don't come to Theotrade to learn an in-out spread. People come to Theotrade to get criteria for the in-out spread. Anybody can read what a spread is, all right? The criteria, it's the differentiating factor here, okay? Then you're actually going to learn to use set it and forget it order types. There's an entire section on how to use GTC orders against this trade. You're going to learn to trade as little as $2,000. All the trades that I'm talking about can be done in retirement accounts, minimal options experience, smaller accounts looking for huge upside potential. Okay, smaller accounts. I mean, we call this the small account growth with in-out spreads. Not to say if you have $1 million in your account, which you just saw me actually fire into an account that has hundreds of thousands in it, it's fine. Okay, of course, you can just scale up and do a little bit more size over here. So you can trade this in a retirement account. You can trade it for account growth. Capital allocation is also an entire subsection of this class. We're going to talk extensively about position sizing and techniques to actually grow the account. Of course, you follow the recipe to be able to build trade. One other aspect that we provide here at Theotrade, and I just tell everybody right now, listen, 90-day money back guarantee. It's a completely riskless trade. Okay. We want you to come to experience Theotrade. We want you to come. We want you to trade with us. Do you have to trade? Of course not. We want you to come and experience Theotrade. So we actually came up with, it's just no stipulations money back guarantee. And we do this because, well, we want people that want to be here. There are 6,000 current clientele of Theotrade, meaning that if you looked at Theotrade on a day-to-day basis, and I don't mind bringing this up for just a moment here, okay? I'm kind of curious what Theotrade is, what it looks like. This is Theotrade. And I'll bring this up a couple of times here, but this is Theo. And what you're actually looking at here is one of our instructor screens. Now, I have it paused right now, okay? And then all of our clients down below, okay? The highlighted people, all right, the highlighted individuals in there, those are the instructors. So you can see he's saying, nice call, Tony, doing well, thank you. Anyway, this is them executing in and out of trades right now. So it's live, and it's live 6.5 hours a day. I'll talk about that. We'll give you access, though, to that and to much more, which I'll cover here momentarily. We want you to experience Theotrade. It's a completely riskless deal. So money back guarantee if you're not satisfied. And so you enroll today. If you're not satisfied in the next 90 days, just email support@theotrade.com, receive a full refund. Okay. There's no stipulations whatsoever. We used to say you had to trade, you have to do a little dance, make a little love, get down tonight. We wiped all that off. Okay. Bottom line is there's 6,000 people here. We are very much comfortable with the idea of people coming, checking out Theotrade, and we want people that want to be here. Like we want people that want to trade with us. And there's not a lot of hype here. If you haven't picked up on that just yet, I'll show you the account. This is no holds barred. We will show you every detail in our account. Every trade that we execute into is live. Okay. We let you see P&L. We let you see everything. There's going to be good days. There's going to be bad days. That's what trading is about. And you need somebody, okay, kind of hold your hand learning this business. So no excuses, by the way, no questions, no commentary. If you need your money back, please just email us. Okay. It's not a lot of money, 90-day money back guarantee. You can enroll, and I'm going to explain much more about Theotrade momentarily. You can enroll right now. It's theotrade.com/IN. Okay. It's theotrade.com/in. I as in igloo, N as in Nancy. Okay. Theotrade.com/IN. Now, before I go any further, okay, this is now going to be a little explanation of Theotrade. Like, what do we really give you, when you enroll for Theotrade? And I'm going to go through and I'm going to take you through this. So, kind of call this a couple of bonuses. Obviously, you're coming here, okay? You're coming here because you want to learn the in-out spread. But there's so much more that we really do offer here at Theotrade, and it's all encompassing. We do not sell classes a la carte because I can't stand that. I spent 15 years running education in the brokerage world. I've seen everything out there, and everybody always goes, "What about this firm and this firm?" Okay, what these guys have the holy grail of charting packages. Listen, if it was good, don't you think a company like Thinkorswim or TD Ameritrade would have bought them? Okay, there's a reason, all right, that myself and the guys that work here at Theotrade, we ran the largest education, okay, in the entire marketplace, period. This is the best of the best, okay? You could go out and you could spend unequivocally $30,000 in education easily, okay? What you're going to get here is absolutely smoke it. In fact, okay, there was a company that we ran at TD Ameritrade. Some of you will remember this. There was a company that we ran at TD Ameritrade. We had a course that was 18 months long. You paid $24,000 for 18 months. What we do here at Theotrade will absolutely smoke it. Let me show you exactly what we do. So a couple of bonuses. We go beyond a class or an indicator. Okay, we get that people, they want everything. You want to be able to trade, to be able to invest at one place and one price. Don't think this is just active traders. This is active traders. This is investors. You guys are going to be shocked how many institutional money managers we actually have as clientele of Theotrade. Okay, bonus one, we give you a start guide. It's a quick start guide. If you've never put on a trade before, we give you a start guide. What does that look like? Okay, and again, I like to bring this stuff up because I think you should see what it looks like. Start here. Even if you're experienced, please just watch them again. It's really good. Like options 101, options 201. I'll make you guys a deal. Okay. A really simple deal here. If you're experienced, go in here and watch order execution part 1, part 2, and part 3. It'll take you a total of about 2 hours. Watch those three parts. The most experienced trader in here. Okay, I'll put money on it. You're going to be shocked what you learn about order execution. After 15 years in the brokerage world, we know everything. We know from the time you actually hit confirm and send in your little mouse, every nuance, okay? Who gets payment for order flow? That's all, okay, divulged in here. Who gets payment for order flow? Does the order get routed to like the New York Stock Exchange? Does it get it routed here? We'll talk about high frequency trading. Order execution, okay? It's unbelievable. You're going to get thousands of dollars of information just in that 2 hour course, okay? Next on the docket over here. So this is just a quick start guide. And I wanted to show you the quick start guide isn't necessarily just for people that are like, brand new. Quick start guide. It's awesome. You're going to love it. Number two, we're going to give you access to 100 different trading classes. Theotrade launched in January of 2016. Subsequently, we have over 100 classes in the last 5 years. Okay. So with 100 classes, we just give you access to everything. As I said, we've built kind of the Netflix for traders. You name a genre of trade, we're there, we're in it. We give you access to the full library from day one. Why do we do that? Because what these other firms are doing is they're stringing people along, 500 bucks, 500 bucks, 500 bucks. Okay, we ain't got nothing to hide, baby. We show you everything. We show you every P, every L, okay? We show you every class, every coaching session. This is, again, it's no holds barred. That was the idea from Theotrade from the get-go, because I don't like that people get strung along in education. Don't worry, you have to take one more class to learn, okay? That is ridiculous. Everything. Now you're coming in here and you're enrolling today because of the in-out spreads class. Guess what though? You also get maximum returns with infinity spreads. You get the Ultima class. The Ultima class has been huge. All right. Guide to surviving and thriving volatility, volatility back spreads, growing a small account, how to collect income being short, next big, short, the risk twist. It's like $9,000 of classes. By the way, I'm not done. Guide selling high probability. This is just a couple of them. Iron condors, covered calls, day trading NASDAQ. We have day trading, pairs trading, top 10 skills for growing a small account, essential skills for consistency in trading. You could spend thousands on this stuff. You get it all today. And by the way, you can start streaming it and you're like, I don't like it. Your money back guarantee. We don't care. Just get your money back. We want you to either be here and be happy or don't be here. And it's okay. Like we can part, okay? We'll still love you. We can part on ways and hand you your money back and still love you. Bonus number 3, we give you an all access pass to Theotrade. What that basically is chat room. The live trading chat room. We give you 3 months access, okay? Unlimited access to it. And what the chat room basically is, we stream for 6.5 hours a day. Every day when there's trading going on, we're trading with you. I mean, that's what's going on literally right now. We also give you with that text and push notifications. If we trade, you can trade with us. There are 5 different portfolios you can follow. We have daily coaching sessions. Everything is recorded. I'm just going to throw that out. Everything is recorded. Everybody goes, how can anybody watch 6.5 hours a day? You'd be surprised. Our chat room, since the onset of COVID, has never been busier. Okay, there are now upwards of close to 3,000 people a day in and out of the chat room. So we have 6,000 people that belong to Theotrade, okay, that are clientele of Theotrade. We have actually 3,000 unique visitors into the chat room every single day. It's incredible. Like the first thing in the morning, we have over 2,000 people that are active in the chat room at the exact same time. It's the most hop-in chat room pretty much in the entire industry, bar none. I think you guys will love it. And we're actually exchanging trade ideas. You're talking to traders in there. You don't have to do this every single day. I'm just letting you know it's there for you. It's part of Theotrade. There's other chat rooms. They charge you $500 a month. We just included it. It's 3 months. We include it. Okay. By the way, with the chat room comes email support, and I put a huge amount of emphasis into email support. Speaking of Theotrade in the chat room, by the way, again, this is Theotrade. If you want to see what Theotrade is, this is Theo. Okay, and when I say this is Theo, this is Theotrade. Let me refresh. Excuse me. Okay. As I refresh the screen, Tony Rago is live right now. Tony is actually trading, NASDAQ futures. I just paused him in there because I'm streaming to you. Okay. Anyway, we're going through there and he's actually posting trades. Obviously, there's some stuff going on in the market right now, so he's probably not posting a huge amount, but it's a big movement in the markets as of currently. So you can actually email any of us. These are the instructors here at Theotrade: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, and Blake Young. All instructors here at Theotrade have a minimum of 15 years, a minimum of 15 years of trade experience, not market experience, of actual trade experience. Just to show you, Jeff Bierman worked with us at TD Ameritrade Thinkorswim, Brandon Chapman, TD Ameritrade Thinkorswim, Blake Young, TD Ameritrade Thinkorswim, Corey Rosenblum. I've known the guy almost 20 years. Steve Miller, I've actually known him since I am a kid, literally started trading in the 1970s. Tony Rago, I've known for years. He just trades NASDAQ futures throughout the course of the day. We have not one, okay, not two. Corey is also a CMT, but three CMTs. Again, Jeff Bierman's also a professor of finance at Loyola in Chicago and kind of moonlights with us. He was also, if you've ever been on the Thinkorswim charts, Jeff Bierman actually he built over half the studies in the Thinkorswim charts. So this is a little bit about the instructors. Every one of us has our own genre of trade. Obviously, I'm the option and volatility geek. Jeff is your resident technical analyst. Matt Williams is a market neutral premium selling. Corey Rosenblum is strictly swing trading. Brandon Chapman's our macro guy. So he's more like what they call fusion. It's between macro and like technicals and fundamentals. Steve Miller is our in-house psychologist and futures trader. He has incredible psychology classes by him. Tony Rago, strictly NASDAQ intraday. Finally, Blake Young's market profile. If you guys are unfamiliar with market profile, happens to be the most happening thing right now inside of futures trading, bar none. So he's our most recent kind of acquisition. Blake Young's been here for just over a year now. I think you guys will love this. There are 8 full-time instructors, including myself. Here's actually the crew at Theotrade. Next, okay, access to 59 proprietary indicators and scans. Everything that we use on a day-to-day basis, okay? When I say what we use, if you go over to the charts, there's all these proprietary indicators like auto expected moves. I'm going to give you a link to auto expected moves. Think auto expected moves isn't important. Look where Google is right now. It's on the expected move, on it. I mean, literally on it. Anything like Quantix is incredible. If you want to see what Quantix does, you'll learn about it. There's a whole class. Not only do we give you the indicator, okay, we give you a class on those indicators. It's all part of Theotrade. There's 59 proprietary indicators and scans, next generation squeeze, unusual put scans. It's incredible. I mean, there's thousands of dollars indicators. We give them to you from day one, okay? Bonus number 4, Theo Theta Live portfolio. This is relatively new. We started a portfolio strictly, okay, for premium selling, but we run it much more like a hedge fund. So you get to watch everything that's done in this portfolio. It's all real time. I am the trading instructor for this one. It's a positive theta. It's based on the Ultima Premium Selling course. It's a no holds barred approach. You get full disclosure, every profit, every loss, every opening, closing, and hedging position. You get to watch me discuss this. There's even update videos. Okay. And if you have a smaller account, we even have a Theo Theta small portfolio. This is actually the Ultima Theo Theta portfolio. Okay. We just list some of the trades that we're doing here on a day-to-day basis. So as we actually execute trades, we list them in here. But again, the Theo Theta small portfolio even texts out and does push notification. We also do a weekly update video. We do a weekly update video as well for in-out spreads. So if you want to follow just purely in-out spreads, this is the weekly spread video update. It's phenomenal. Again, you don't have to sit there and watch all week long. We condense everything down to about an 8 to 10 minute video on a Friday afternoon, okay? Bonus number 5, a technical analysis toolkit. This is actually taking you through the entrance of technical analysis, 101, 201, MACD indicators, timing-based trading indicators, pattern recognition, and there's 21 other technical analysis classes. Most of this is actually done by Professor Jeff Bierman, okay? Bonus number 6, day traders. We have an entire day trading genre here at Theotrade. Intraday NASDAQ futures, okay, S&P, blueprint, consistent intraday strategies and setups, and again, high probability intraday trading systems. This is all part of Theotrade. It's all included, okay? Number 7, mindset mastery. I put a huge amount of emphasis to this particular course. I'm serious, write this down. 5 essential building blocks to successful trading. Enroll today, okay? You know, you can go through the small account growth class, but I'm telling you, keep a note. You want to watch this class, okay? I made special, like, you know, I threw this together as part of the bonus because I wanted to make sure that every single individual And every single client that comes through Theotrade, whether they're an institutional trader, whether they're a retail trader, I don't care whether you have $2,000 in your account or $2 million in your account. This is Steve Miller's class. This isn't one of mine. This is the 5 essential building blocks to successful trading. When we first launched this class, we did sell it because the class was that damn good. We sold it. We sold it for $1,000. Okay. And we sold literally thousands of this particular class. It's part of Theotrade now. Just part of Theotrade. And we just incorporated it because we thought it was, the class is so good. It's like, it's just essential. It's essential. I'm telling you, write that down because you can go in there, you can view it. I know everybody's thinking they're like, oh, I'm going to go in there and view it, and then I can get my money back. Listen, we get it. There's a money back guarantee here. Like again, we're not going to twist your arm in any way, shape, or form. But there's certain classes that I think you should view. Anyway, that's bonus number 7. What our members are saying. This one comes from Maryland, and it was literally this came in this morning. Hey, it's Marilyn here. I'm a Theotrade member already. Very happy I found Theotrade, watching several of the in-out spread videos for the second time, really understanding much more the second time around. Downloaded the vertical debit spread calculator. Just want to make sure I understood how to figure out the dollar amount for GTC orders. Currently have 5 in-out spreads on Tastyworks. Thanks for all the clear teaching from Marilyn. Okay. Listen, Theotrade includes everything you're going to need to what? Trade. It's got classes, coaching, email access to the instructors, live trading chat rooms, indicator scans, mobile access. Okay, it's everything you're going to need. We tried to build the Netflix for traders, different genres of trade. All of our classes are searchable, meaning you can go in there and type in a topic like, I want to find everything there ever was to know here about in-out spreads, and it would come up, right? I mean, that's what we've built here. Again, with a mobile application. It's $297 for 3 months. Okay. I want to clarify something right now because this is going to come up constantly, right? What we do here at Theotrade, $297 for 3 months. This is not an introductory price. What happens after 3 months? We charge you $297 for another 3 months. This is not a membership. Okay. No memberships. Okay, we don't do that. There are no memberships here. Why are there no memberships? You decide. After 3 months, if you want to do it again, great. $297 for 3 months. Okay. If you don't want to do it, we get it. If you need your money back in the first 3 months, we also get that, which I'm going to cover once again over here. Everything that's included for $297. And again, you're going to go out there and you look around, you could spend $30,000 in education. You will not get what you're getting here at Theotrade for $297. One of the reasons there's 6,000 people. Like people hear that number, they're like, it's not that much. You're like, wait a second, no, that's actually a lot. When you look at some of the brokerage accounts, we have some of the most active traders, okay, in the industry here at Theotrade. Go to theotrade.com/in. Theotrade.com/in to enroll now. So you get the guide to small account growth with in-out spreads. Obviously, check. You get access to all 100 trading classes. You get new monthly classes. I didn't even mention that. We have some new classes coming up. You have a live trading chat room. We broadcast live, real-time trade ideas. We give you every indicator and scan that we ever built. And there's more indicators and scans always coming down the pipe. Okay. By the way, we're starting to build indicators and scans for other trading applications. You'll see more on that in the near future. There's text and push notifications. I mean, people charge, okay, hundreds of dollars a month just for text and push notifications. $300 for 3 months, the money back guarantee on there. Okay. I mean, text and push notifications, we could probably charge, $300 a month just to text out these trades. We don't. It's just part of Theotrade. We have daily coaching sessions. It's actually most of the coaching sessions. What is that? It's like continued education. That's actually done by Professor Jeff Bierman. Instructors directly answer your questions via email. And by the way, with email, you don't have to come in here and say, my dog's sister's friend's brother has this trade on. Hypothetically, hit us with real questions. Copy and paste your trades in there. We're not going to shy away from it. Okay. I've held every brokerage license imaginable. I've had a Series 3. I've had my Series 4. I've had my Series 7. I've had my Series 24, which is a principal broker dealer. And I've had my Series 66, which is a 63 and a 65 combined. You want fries with that? Okay. We know how to answer trade related questions, and we will do just that. So again, theotrade.com/IN. I will reiterate this. Theotrade's completely riskless trade, 90-day money back guarantee. If you're not satisfied anytime in the first 90 days, you don't have to call us. Please don't. Just email us, support@theotrade.com. Say, this isn't for me. Fine. Don't worry. You get your $297 back. One of the things I always point out to people, okay, there's no stipulations to this. You want to know why? Because it's $297. We don't need your $297 that bad. There are 6,000 clients here. That's not why we're doing this. Okay. I mean, again, we are here. We've been in the education industry in, the brokerage side of the business for 15 years before even coming out and building Theotrade. Like, we're into this. We trade with people every single day. There was almost a year period where I had left TD Ameritrade before we started Theotrade, and I would just sit in front of my computer all day and just talk to the screen anyway. My wife was the deciding factor of Theotrade. She goes, "You sit in front of your computer screen and talk to it anyway. You might as well put a microphone in front of your face." And I'm like, "That's a good idea. We sit here and trade all day with you." And then we actually fire trades out. We do classes and stuff. Sometimes we even do classes like on a Saturday morning, but everything's recorded. And again, no excuses, no questions, no commentary. If you don't love it, okay, we get it. Get your money back at support@theotrade.com. So again, Theotrade, unlimited mentoring in here. We're going to work with you directly. There are 30 spots on the Theotrade riskless deal. Now, I throw this out here this is to incentivize people to enroll today. Why do we do 30 spots? Because we have to answer emails one-to-one, meaning that we allow 30 individuals today, and there's almost 1,000 people live right now. Okay, and I make no if and or but about that. We allow 30 of you to enroll completely riskless. So those of you that are enrolling for Theotrade right now, the first 30 individuals, okay, you get a full money back guarantee for the first 90 days. And we do that just to incentivize people, obviously, to enroll. But, we also do that because, well, we answer emails one-to-one. We talk about, trade and, specific trade related emails. The $297 riskless trade offer, it's never been available before with in-out spreads, okay? Plus the Theo Theta portfolio. The Theo Theta portfolio is relatively new. And again, there's no stipulations on the money back guarantee. I think that's one of the most critical, one of the most critical aspects of it. And there's unlimited email mentoring. And that's one of the reasons we limit it to the first 30 people. I will let you know if you're one of those first 30 people. I'll actually read off a couple names in the first few minutes here. We're going to answer some questions here momentarily. Again, yours today, the guide to in-out spreads, quick start guide to getting into this, 100 classes, VIP membership, which is the chat room, the Theo Theta live portfolio, okay, the technical analysis toolkit, the day trading treasure test, that's a tough one to say, and the mindset mastery, okay? What our members are saying, this comes from Chris. I've learned more in the past few weeks about managing and defending, okay, my portfolios than I've learned in my entire trading life. Okay, nothing I've learned would have been possible, okay, without having tuned into your teachings for the past 2 years. Also, my atomic hedge took a large sting, okay, out of my long-term IRA destruction. Clearly, you don't have to be a teacher, but thank you for doing so. Stay safe, from Chris. I just threw this in here because there's a great email. We really get specific with clientele in terms of what they're doing in their portfolio. And that's important that you guys know that. If you follow me to this link right now, it's theotrade.com/in. Follow me to that link. And you can follow me to the link for the auto expected move indicator. Okay. But I'm actually going to pop this up here. By the way, this is the in-out spread. These are the updates. Okay. Every single week, we are actually doing this. And I'm going to answer some of your really specific questions in here. So again, to the web page we go. Make sure we're good here. It's theotrade.com/I as in igloo, okay, N as in Nancy. Guide to small account growth and out spreads. The one aspect I wanted to show you in here, when you come to this page, again, there's 30 riskless spots, click add to cart. And the reason I'm bringing this up right now, and you're going to see here momentarily, is click add to cart. Number one, it asks for a phone number. Put the phone number in there because it automatically enrolls you for text messaging. We're not going to bombard you with text messages. We only do a handful in any given week, okay? We try to actually limit the number of text messages and push notifications because otherwise it becomes simply too much, Okay. Those that want to day trade, you can sit in the platform and you can day trade with us a little bit. We send out like in-out spreads and we send out the ultimate trades via text messaging, but include your phone number, okay, in here. And of course, we will automatically include you in those text messages, unless of course you wanted to opt out. The next aspect in here, as you're actually enrolling for this, okay, the payment information. One of the things that's critical that you understand is we are not a membership. It's a single payment of 297, or you can even actually elect two payments of 149. The only reason I put this up here is everybody looks at this and they go, oh, it's another membership. Okay, we don't like memberships here, and we know that you don't like memberships. No one likes like a gym membership that's impossible to get out of and it just bills you, $100 a month for the rest of your life. It's not what we're about. Hey, listen, check it out for 3 months. If it's for you, phenomenal. You just keep doing it. And I'll tell you what, some people go, I'm going on summer vacation. Put me on hold. Email us and just go on hold. We don't care. Okay, come back. Right? Nobody ever leaves Theotrade. Nobody ever leaves Theotrade. And if you do leave Theotrade, everybody comes back because I don't care where you go. When it comes to education, there is nothing that even comes close to this. And if anybody's actually been through any other education, you're going to know that the second you come into Theotrade, that's why we do the money back guarantee. Because like we know right off the bat, no one can even come close to what we're doing, not only at the price point, but the degree of education. Like, does anybody else have a professor of finance, 3 CMTs? Everybody has a minimum of 15 years of experience. Okay. Other people have individuals that were like, I was a trader that became an instructor. Okay, we don't do that here. Okay. You are either an industry expert, okay, or you ain't working for Theotrade. Bottom line, everybody that works here at Theotrade was in the industry, either was a brokerage firm, okay, a market making firm. Some of us have both experiences. We were institutional money managers. Jeff Bierman actually ran a hedge fund for years. Okay. It's important that you guys know that at any price, you're not going to be able to beat what we do here for $297. Now, a couple last things in here. Oh, if you follow me to that link for the auto expected move indicator, I did actually want to show you where that is. Toward the bottom of this page, the auto expected move indicator for Thinkorswim. When you enroll for Theotrade, you need not download this right now. You can download this from the Theotrade site. Okay. So those of you that are enrolling, don't bother doing that right now. We can get you set up with that a little bit later. So I'm going to come in here and I'm going to answer some general questions, and we're going to move forward. By the way, another one from our clients, Todd Summerall. Don't know if you remember, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you for your information. Before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. And I am, from Todd Summerall. So I like to throw that email up there simply because it just shows, like, again, we're not afraid to answer some questions and answer some emails. And again, I am going to not only answer a few questions in here, I'm going to answer some general questions, and I'm going to answer some very, very specific questions. And again, I am also going to read off, and you'll see this in a minute. I'm going to read off the names, okay, of the individuals that are enrolling. And it takes me, just so you guys know, it takes me approximately 5 to 7 minutes before I actually see your name populate on our database. So after you enroll, don't panic. Okay, the first 30 people get a completely riskless trade in here. But I will answer every question that you guys have. Let me get through some generalized questions to begin with. So the generalized questions, then specific questions, and I'll read off a couple of names as we go along in here. One of the first things that people constantly ask in this case, and again, it's taking you guys a couple minutes to get these in here, but I'm seeing a few names populate, and I'll go through them in just a minute. Okay. To get started here, you need a laptop and you need an internet connection. Quite frankly, I don't think you even need a laptop. I think you could probably use a mobile device at this point in time to trade, to watch Theotrade. It's more than enough. We have everything that you're going to need to get started here. The other thing I stress on that particular front, when I say we have everything they need to get started, one key point to be made on that front is that something that you need as a trader or investor that we're not offering, please, okay, email me. Like just put Don in the heading, support at theotrade.com. We want to know about it. Number two, this is not a membership. Okay, we don't auto renew, we don't auto bill. We don't have to, right? We think that it's the right thing to do. If people want to be here, they're going to be here. You know, if it's not right for you, we get it. Okay. Number three, we're now actually providing weekly Theo Theta and in-out spread updates. So you can't watch the entire week, right? We get it. You're going to work, okay, or you have a job where you just simply can't sit in front of the screen. We get it. We give you a little snippet, like an 8 to 10 minute video that updates you on all the trades. And we do it on Friday morning so that you can actually execute the trades possibly on a Friday afternoon or even on a Monday, okay, following some of those ideas that we provided to you in those two videos, an outspread video and a Theo Theta video. Okay, it's great. Number four, we archive everything. Every word spoken on Theotrade is archived. Okay. And number five, we actually give you a mobile application. So there is Theotrade mobile. And you're like, well, what can you do on Theotrade mobile? Pretty much everything in terms of watching archives. And the cool thing is about Theotrade mobile is that the mobile application allows you to actually speed things up. So you could watch stuff at 2 times the speed. I know that's really exciting for everybody. Okay. It's enthralling to watch Don at 2 times the speed. I already speak fast enough. Speaking any faster would be absolutely brutal. Okay. Number six, add your cell phone number. Okay. When enrolling to receive trade ideas via text message and download Theotrade mobile push notifications. So just put the cell phone number in when you're actually enrolling, you're good to go. Okay. Moving on over here, you can email us anytime. You're going to receive a response within 24 hours. One of the biggest areas of support over here, and again, I personally think we could probably charge $1,000, a month for a feature like this. You email us, you can bounce real-time trade ideas off of us, and it's probably one of the biggest areas of value in Theotrade. You can't call up a trade desk right now. You can't call TD Ameritrade. You can't call anybody. Nobody's going to answer the phone for 45 minutes. Okay. But you can surely email us and we'll get back to you. And even if they do answer the phone at one of the brokerage firms, they're not going to tell you squat. Okay. Now you have somebody you can actually bounce ideas off of. Number eight, you gain access to everything we've done in the previous 5 years. It's all searchable. If it's archives on it, good. Number nine, variations of every trade that I displayed today can be done inside of an IRA or retirement account with as little as $2,000. So anything that I showed today, IRA friendly. Yes, check that box. Anything I showed today, as little as $2,000 in the account. Yes. Okay. Number 10, we can help you get approved for options. That's not even a concern anymore. There are several brokerage firms that we at Theotrade work with. Remember, a lot of us come from the brokerage industry. Number 11, there are 30 riskless spots left, which are, again, I'm kind of watching some of the names go through here, and I'm going to answer some of the specific questions in here. But there's watching again, a bunch of the names actually populate. It takes 5 to 7 minutes before they actually show up here. So number 12 here is just, get results, take action, get into Theotrade now. All right, so let me just pull up a web address, and I'm actually going to answer some of the specific questions. Some of the specific questions in here, and then we'll go from there. Okay, so to begin with, I like this one. Steve said, do you ever trades the same bullish and bearish? So there is a strategy that we would employ that is both bullish and bearish at the exact same time. It's a net neutral strategy on the buy side, but it's not the in-out spread. Again, it's not the in-out spread. It's actually another strategy which we absolutely do give you access to inside of the archives, and it's called a gamma iron. And you can actually look up, there's an entire class on gamma iron condors. So it's something worth noting that the answer is, in short, yeah, we do. We absolutely do have a strategy that's both bullish and bearish in context there. Okay. Next one on here. Somebody said, can you see order flow in on Thinkorswim? And the answer is nope. Okay. Listen, the days of Thinkorswim. And again, I grew up at Thinkorswim. When I say I grew up there, started working at Thinkorswim when I was 24 years old. I was employee number 13, lucky number 13. It's going by the wayside. There's less and less features, and it's owned by Charles Schwab now, so it's a little bit more regulated. There are several different brokerage firms we will now work with. Thinkorswim, TD Ameritrade happens to only be one of them. So it's worth noting. By the way, the first batch of names kind of came through here. Nathan V from Massachusetts, Charles C from Texas, David P from Washington, Scott U from Minnesota, Lawrence L from Georgia, Scott B from Arizona. That's just the first grouping of names that actually came through here. And again, it takes 5 to 7 minutes for this to actually come through. So the next one over here, somebody said, George said, what's the better strategy to start out with for new options trader with a small account? Okay. He said, ultimate trades or in-out spreads, or does it matter? I'm going to tell you right now, George, I would actually say I would fire off a couple of in-out spreads initially. I'd fire off a couple of in-out spreads initially to get a feel for order execution, for flow. And when I say for flow, just your own ability to be able to execute trades. It takes newer traders time to not just adapt to the education, time to adapt to some of the technology and getting used to actually routing orders. Okay. So I would start with the in-out spread. I mean, the in-out spread, it's the bread and butter. I mean, and this is where, so many people look at the strategy, they're like, it's great, it's simple. Okay. That simplicity, I still trade them every single day. Still, I trade in-out spreads constantly. Why wouldn't you? Because again, the logic is, it's like bulletproof logic in there. It's a higher probability, of making money versus losing money. You don't use a stop order. If you're wrong directionally, you're still going to live and survive and be able to tell the story. Okay. Only one or two more in here, and then I'm going to answer some of them a little bit offline. I'll type some emails to you. This is actually a relatively advanced question over here. How does skew affect these trades? Okay. So here's something interesting. How does skew affect these trades? A few months ago, okay, it wasn't working as well bullish. Skew actually affects the trades now, which is crazy, in a positive light. There are so many people buying calls right now that some of the equity products, it's cheaper today to buy a call spread than it is the put spread. It's wild, just wild stuff. It's something I did a trade in Apple last night. We fired off some trades in Google, Microsoft. Okay, and if you looked at the skew is actually inverted. Again, I'm speaking deep, for just a moment, but there have been inverted implied volatility skews, which are actually beneficial for clientele. So I'm going to answer some questions offline because I've actually held you guys here way longer than I ever intended to. I can even, reassure everybody that if there's any more names in here, we'll fire those in here in just a moment. And again, there's a bunch more names that have come through. Okay. Wade H from Texas. And again, I'm just watching them come through, which takes a couple of moments. If you ever need to get a hold of me after today, just support at theotrade.com. Again, enroll today. It's theotrade.com/IN. Thanks everybody for joining us this afternoon, and have a wonderful rest of your day. Bye-bye.